Welcome to Finpod, your daily financial digest. I am Evan, and I am glad you are here to wrap up the day. Finpod is brought to you by Fintwit.ai, your source for real-time trading signals and stock recommendations. Let us dive right in. The conversation on social media today is dominated by a major shift in investor sentiment regarding big tech and capital expenditures. Tesla is the talk of the town after a rough session, with shares down nearly 15%. This follows an earnings miss where investors were clearly rattled by the company's aggressive spending on AI and robotics, which is pressuring margins. Then we have Google, which is down about 7% today. Even though they beat revenue expectations, the market hammered the stock after management signaled a massive hike in capital spending, leaving investors worried about when these investments will actually hit the bottom line. On the flip side, we have seen some action in Hims & Hers Health, which is up over 3%. The move comes after an FDA advisory panel surprisingly voted to recommend loosening restrictions on the peptide BPC-157, a move that could open a significant new revenue stream for the company's compounding business. Intel is also on the radar, down about 2% ahead of its earnings report, as investors weigh the company's painful restructuring efforts against its massive year-to-date rally. It has been a tough day for the broader market. The S&P 500 sank 1.2%, the Dow dropped 1%, and the Nasdaq took the brunt of the pain, falling 2.2%. The story here is a clear reassessment of the AI trade. Investors are no longer just cheering for massive infrastructure spending. They are demanding proof of returns. This shift, combined with a spike in oil prices following reports of regional conflict in the Middle East and rising treasury yields, created a classic risk-off environment. In the AI economy, the narrative is shifting from growth at any cost to fiscal discipline. While companies like Microsoft, Meta, and Amazon continue to pour billions into data centers and chips, today's market reaction to Google and Tesla shows that Wall Street is getting impatient. We also have news from Washington, with a new executive order authorizing the use of AI to map defense supply chain vulnerabilities, which adds a layer of regulatory focus to the sector. Meanwhile, lawmakers are pushing for an AI kill switch bill following a cyber incident at OpenAI. Looking at other stocks in focus today, we saw a lot of movement in the industrial and defense space. Raytheon Technologies reported strong double-digit sales growth and raised its full-year guidance, sending the stock up over 7%. Similarly, Lockheed Martin climbed over 10% after reporting a record backlog and raising its financial outlook. Honeywell also saw a healthy gain of nearly 6% following its own quarterly update. On the earnings front, T-Mobile US had a difficult day, dropping about 11% despite reporting strong account growth, as investors likely reacted to the broader tech sell-off. Thermo Fisher Scientific was a standout, jumping almost 9% after beating revenue and earnings expectations and raising its outlook. Union Pacific also had a good day, rising 4%, while Blackstone saw a modest gain of over 1% after its latest results. That is the wrap for today. We covered the tech-led market pullback, the cooling enthusiasm for massive AI spending, and a flurry of positive industrial earnings. If you enjoyed the show, please like, share, and subscribe. Leave a comment if there was a specific stock or sector you want me to cover next time. For stock recommendations, visit Fintwit.ai. See you tomorrow.